Okay, good afternoon everybody. You should be able to hear me. I think there's one person here, so I'll just give it a second for a few people to come in, and then we'll get going. It's gonna be a short and sweet session, more of a test really, but nice one, Ian. Thanks, mate. Is the music too loud? Not loud enough? Ryan, what's going on, man? Just give it a little longer, and then we'll crack on. It's strange. Are we definitely live? I know you guys are answering, but this is That's weird, man. We normally get more people. Strange. Alright, so doesn't matter. Let's just crack on, and then while people are coming in, we can just get on with it. So yeah, I mean, obviously I've been a little bit quiet. Just to give you guys a really quick heads up, I was on Sunday. I had a really bad last Sunday, like a really nasty allergic reaction. So I was completely out of it, man. And to be fair, you know, my system took a pretty big pounding, so I'm not 100%, but I'm all right. So I want to talk a little bit about futures, and I've noticed that there's quite a few people that were discussing futures in the Discord, predominantly in the Patreon, on the Patreon side of things, but somebody messaged me privately, well, two people messaged me privately and asked me about futures and whatnot. So I thought it'd be a good idea just to kind of throw up some futures trading, just talk a little bit about futures, why it's advantageous to trade futures, and hopefully if we spot a trade, we'll take it as well. Now I'm using NinjaTrader, and if we do end up opening a trade, you'll see it on the chart and everything, all the profit and loss and whatnot. But I want to quickly say as well, when you're using NinjaTrader, or if you're using NinjaTrader as a broker and their platform, the platform's absolutely amazing, but there's a few things you need to remember. Because I had a conversation with somebody recently about NinjaTrader, and they downloaded it and they're like, oh, it doesn't work, this isn't happening, why do my charts look different to yours, why can't I see the trades, da 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 da. Well, the thing about NinjaTrader is you can get a basic free NinjaTrader, and it's okay, you know what I mean, but a lot of the features aren't available unless you get a leased or lifetime license. A lifetime license is like, if memory, I think I paid $1,099 if I remember. You can do it like over 4 months, or you can just lease it for like $300 a month or whatever it is, and that will give you all the other features. So for example, there's a feature up here called Chart Trader, and that is, you won't be able to see it on your screens. Let me see. Yeah, you can't see it on your screens, but Chart Trader basically just, when you open a position, it shows up on the chart and allows you to kind of move things around a little bit. It's pretty pricey, but if you're trading futures, continually, then it's worth it. And obviously, guys, any questions, throw them up. So this is the micro NQ, right? To open a micro NQ contract, you need, at least through NinjaTrader, a minimum of $100 margin, right? So if you have $100 in your account and you open a trade, that trade will stay open. As long as it goes into profit, you're okay. If it goes below $100, then you won't be able to open another trade again. For the S&P, it's $50, and then obviously for just normal, the normal contracts, just the E-minis and just the normal NQ, the ES and the NQ, I believe it is 500 and 1,000 respectively. So futures aren't to be trifled with, man. Futures are dangerous if you if you if you just, you know, if you're a maniac and you have no control over yourself. I would avoid futures completely. Just stay the hell away from futures, man. You know, it can be very, very dangerous. So let's just jump over to the calendar. All right, and I just want to bring your attention to something. So at 2:15 GMT, which is about an hour. Nope, it's about half an hour, sorry. 30 minutes or so. Williams is speaking. I have no idea who this person is. I'll just know it's FOMC. You know, and it could create a little bit of volatility in the market. You know, 6:01, you've got the 10-year bond auction, which can sometimes cause volatility in the market. But again, we're going to be so far into the New York session, we'll have a better idea of where liquidity, you know, build-ups are, and you know what's kind of happening. And then FOMC Waller is speaking again. I have no idea who that is, but the real impact is probably coming tomorrow at 1:30 GMT, unemployment claims, and then we've got at 3 p.m. On Friday, sorry, you know, consumer sentiment and whatnot. So there's a little bit that can get things moving, but I'm not you know, not getting too excited about all of this at the moment. Now I want to show you guys something. Right, if any of you have any idea, right, what volume profile is, I don't particularly use this that much, but the reason I want to show you this is I want to bring your attention to something. The futures market is on a centralized exchange, right? So all of the volume that goes in and out of the futures market. So for example, with the micro NQ, we see it, right? Everybody sees the same data. And with NinjaTrader, you know, again, you need the lifetime license to be able to use some of these features. It's called the order flow feature, and there's a bunch of them, you know, volume profiles and some other things that allow you to be able to see where, you know, predominantly the biggest buildup of volume is, you know, some areas of control and these types of things. But the reason I want to show you this is because it illustrates a point. I don't use volume. I never have, right? I'm lucky enough to be able to, through experience, see most of the things I want to see on the chart, kind of get a sense of, you know, of momentum. But volume profiles are pretty cool because what they do is they show you where the biggest hotspots are. So you'll notice, you know, right here where that line is, you know, at 12,743 is where the biggest amount of volume was, you know, on this session today so far. Yesterday, the biggest amount of volume came in around about 12,518, which begs the question, right? If most of the volume came around that level, then why did price explode to the upside, right? And this is really, really important because a lot of people don't realize that yesterday's pop was a short squeeze. A lot of people were going short yesterday. So you've got loads of people going short around this area down here, right? So you've got a lot of people going short down here, right, around about sort of 1250, 12,500 to around about sort of 12,000, you know, 530 to around about 12,550, and then it pops, right? You get that really, really big move, and it was really volatile, very, very volatile. I know I was watching a live stream yesterday, and this guy was down, and then he was up again. He managed to claw it back. Great trader, absolutely amazing trader. But anyway, it pops to the upside, and you got traders basically getting short squeezed, you know, and then they're trying to short on the way back up as well. So it's an interesting tool if you know how to use it, but ultimately it's more to illustrate that the volume on the futures market is very important because it is used by everybody in the same way, right? It's basically available to everybody. Everybody sees it. It can't be manipulated per se. You know, most of the manipulation that happens at the futures market is, you know, algorithms and market makers and, you know, that type of thing. Whereas with Forex, for example, you're going through a dealing desk, which is pretty shit, to be fair, because they can change things up. So anyway, let's do a little bit of analysis. Let's go to the hourly. So right now, I don't really want to be doing anything purely because of this. So you can see yesterday we had a really, really strong move up, then it came all the way back down, and then it reversed again, and now we're just kind of hovering around, you know, in the upper quarter of yesterday's move. So what do we do with that information, right? As price is coming down, you see this point right here. right? So that point right there was the crossover point. You see a little bit of movement, price drops again, and then it goes for that secondary pop to take out yesterday's high of the day. This is a impulse right here, which means as price is coming back down, you should generally tend to see a little bit of stability, and you can see that price is kind of coming down a little bit. There was a trade this morning about an hour ago. I actually tried to take it, you know, and it wasn't really moving. So I just closed the position, you know, took a $6.50 loss. But other than that, I haven't done anything else today. So I'm just going to kind of wait and see what happens. And in the meantime, let's try to kind of outline a few scenarios, all right, that we're expecting for today. So for me, I don't really want to be doing anything until price effectively gets back above this. Right, we don't really want to be trading anything until price shows an indication, right, that it wants to continue this upward momentum, right? Because to be honest, every time price has been going down recently on the NQ, the Nasdaq, the Dow, you know, S&P, equities, US equities market, it just keeps going back up again, right? Which is great. You know, that's what we want to see for now, anyway, at least, because it will be a sustained movement, you know, in the cryptocurrency market as it filters over. But at the moment, as price is pulling back and coming into this area where I expect there to be a little bit of stability, I'd like to see volume pick up and momentum push to the upside, and then as long as it takes out some, you know, this kind of high somewhere around this area, then we can start to think about potentially getting through 12,800 again, and then continuing to the upside, you know. And then the next level, really, to be honest, before we get a little bit of slowdown, is going to be just here, which is obviously a good distance away, well over 100 points right now, 100, 120 points or so. And just a quick side note as well, the Nasdaq is very, very volatile, moves very, very quickly. So, you know, again, a bit dangerous. I wouldn't advocate anybody trade futures unless they do it slowly, calmly, know what they're doing, and ease their way into it. Don't forget to like the streams as well, guys. Or stream, should I say. So is there any questions? Anybody want to go for anything? It doesn't necessarily have to be about the futures market. We could talk about anything. And in fact, let's go back over to cryptocurrency and see what's a shaking. So as expected, Bitcoin stabilizing. Yeah. No real mystery here. Nice strong move. Pause. Impulse. Messy. Right? And it's getting messy in this area. And again, I know I don't really need to say this, but I'm going to say it anyway. You know, obviously these levels up here we had on the chart way before price got there. And obviously price has hit these levels and we're starting to slow down and get messy and prices all over the place. You know, so I you know, this is part of the reason why when I have conversations with people about some of the analysis that I do, I switch off. I haven't got time for it. You know, everybody trades their own way. This is just what I see. But Bitcoin should, to be honest, I mean, depending on what the Nasdaq, predominantly the Nasdaq, depending on what the Nasdaq does, it should keep Bitcoin in an area where we should see up, you know, a bit more upside. If it stabilizes here and the Nasdaq comes down, that's not a bad thing. That should show that Bitcoin wants to continue to the upside, or at least stabilize in this area. Just as a quick one, if for whatever reason this week's candle can clear last week's candle, you know, then we're good for 25 plus, easy. But for now, we're in an area where you can expect a little bit of pullback. Might happen, might not happen, but it's definitely something to be mindful of. Binance is on its own page a little bit. You know, it is looking like it wants to kind of challenge that sort of 335, possibly a little bit higher at 345. It's a sweet spot. So again, not really much to kind of say on the Binance side of things, other than it is holding up a little bit stronger than Bitcoin, and it's a little bit, you know, it's a little bit more exaggerated in its movement. So let's go back to the Nasdaq. Now this is going to be pretty slow at the minute, so I'm not expecting too much movement at this time of the day. So yep, if anybody wants to ask any questions, if you guys want to go through anything, let me know. Hey, that's more like it. 15 people on the live stream. Fantastic. Please tell me that you guys are still there and that you can hear me and that I haven't just been talking for the last 20 minutes to myself. I can see that the microphone's moving, but you know what? You never know with this thing. Like, you know, I've sat and spoken for flipping hours sometimes, and everyone's just like, when is this guy going to start talking? Hey, fantastic. Morning Jimmy, morning Don, morning Rick, Sty, morning, Lobo, morning. Fantastic, fantastic. Good stuff, good stuff. Yeah, so I was just talking about a little bit about futures, platform that I'm using here, and some of the other things, and then we went over to crypto a little bit. So yeah, I mean, you know, look, I'm not expecting too much movement or anything, you know, anything spectacular at the moment. But this is an interesting area down here as well. You know, we have plenty of reasons for both. So price really starts to you know, sort of drag to the downside. And let me just go off on a little tangent for a second, right, and just explain something to you guys. Yeah, absolutely, Donny. Definitely going to be a big week this week and next week. But I want to talk about something, because I had a session this morning with somebody that I'm helping, and I was saying to this person that we're not interested really in trying to guess what the market's doing, right? The idea with trading, you know, and I'm talking about trading for a living, right? If you really want to take this seriously, let's just cut all the BS, right? And let's just talk about trading, real trading. If you want to trade for a living, right, you need to understand we're not here to guess, right? What we're trying to do is we're trying to position ourselves, you know, in position, like in trades where we can make money. Okay, and that makes sense. We want these trades to make sense. So right now, as I've said many times, I really don't care about price, and the futures market is brilliant for this. It doesn't matter where price is. It's whether it's 12,500 or 800 or 700, it doesn't matter. We're just looking for ticks. The only thing we care about is points or ticks, right? And wherever they show up, we're only interested in basically capturing X amount. That's it, right? So if I was looking to take a trade today, as I was explaining to this guy this morning, I was saying we need to basically find tradable scenarios, right, and then wait for those to happen, right? So as a quick outline, I know that price shouldn't really get past 12,700, right? There was an impulse there. It's clear. It's obvious. There's no way you can say it never happened. It happened, right? You don't need any indicators to show you this. Indicators are valuable in certain circumstances. Some people use them. I don't, right? But I can tell you it's right there. We can see it. On that push just here on that candle, price paused, right? So it receded a little bit and then it dropped before it continued to the upside, right? So we know that that impulse from this point, yeah, 12,698, literally almost on the whole number upwards, right, was responsible for creating that last push to the upside and taking out what was at the time high of the day. Brilliant. So as price is coming back into that level now, there's a lot of work that's happened here. Think about the logic. People were buying above 12,700. So go through the motions. We've had a nice push to the upside. Then it reverses completely, trapping loads of traders long. Then it reverses again, trapping loads of traders short. So when we finally get to this point here, how many people do you think breaking the 12,700 level, right, are thinking, do you know what? This is going straight for high of the day again. Yeah? So they buy. They buy. It pushes. It takes out high of the day. And then it slows down, you know, obviously going into close. You get a little bit of a pullback going into close. And then obviously we, you know, go into the post-market sessions. And then today, here where we are, right? So as we're coming back into this area, if anybody's holding this, you know, they've moved their stops. Price is driving into these levels, you know, and now roughly around this area here between, you know, sort of 12,700 and 12,720, we should get, a little bit of selling, or people taking their profits, or people, taking their positions off at break even, and so on, right? We'll also ideally should start to get more people jumping in now and buying, because this is a complete reversal. So as I was saying previously, what I want to see before I do anything really is I want to see price at least get back above this level up here, right? So it's roughly around about sort of 12,780. If it does, we're 20 points off 800, which means I should get that push, and we're close to high of the day. So ideally, we are looking at, realistically, around about 36 point range, yeah? Now remember, each one of those points is 4 ticks. Each one of those ticks per contract on the micros is 50 cents. So per point, you're looking at $2 per point, right? So you capture $10, it's 20 bucks, $20, $40, and so on. So there's a reason. That's my reasoning to the long side. To the downside, I would not consider taking a trade at all until price gets at least to here. Right? I don't want to do anything until we're at least at 1250. Yeah, so 12,550. Yeah, so a lot of people may think, or some people may think, man, that's miles away. Why don't you take a short, or why don't you, like if you think price is going to go down there, why not take a short? Because the confirmation isn't there. There's no context. If price comes all the way down here and the way it comes down here, let's imagine the market opens in 30 minutes, right? And it pops to the upside, reverses, and then starts to drive lower, and then it's currently sitting at 12,550 by the time we get to about 3 o'clock. Yeah, could happen. No reason why it wouldn't. I would be much more inclined to think at that point we're getting that last drive into these lows. Yeah, so if we're currently sitting roughly around about here, you get that last drive into these lows, and then you're talking about a 90 point range. So I've got my tradable scenarios. Is there anything else that I need to do? No. Just watch price for the confirmation of these things. Now, there's thousands and thousands and thousands of ways to trade. Thousands of ways to trade. But for us, or at least for me, there's only two. A break of this line, or at least realistically, and I'll just put it on the chart just for now. Around about 1250 just there. Nope, wrong one. Let me just do a copy and paste, it's easier. About there. I wouldn't really want to be doing anything until price gets there, because it's basically negating this entire move, and it's showing that it wants to probably go for these lows down here. So yeah, we just sit back, we chill. There's nothing for us to do, other than be patient, wait for the market to open, and then act accordingly. So if there's anything you guys want to go over, anything you want to talk about, anything that you want to address, let me know. Don't forget to like the stream. Is it better for a beginner to learn to trade in the stock market or crypto? Seems crypto is just a bunch of manipulation. It's an interesting question, Ryan. Stocks, in my opinion. Crypto is extremely volatile. Yeah, very, very volatile on the trading side of things. Now, when you trade the stock market, you may say, but the stock market's really volatile as well. It is, but there's a little bit more fluidity to the stock market because there's consistent volume. So if you're trading a stock like Qcom or Intel or Microsoft or Apple or whatever, there's so much volume on these stocks, right, that there's a little bit more fluidity to it. Violent, yes, but more fluid violent, if that makes sense. Whereas with crypto, if you're trading Bitcoin, which is probably the most, or Bitcoin or something like Binance, for example, or BNB, the volume isn't as much. It's a little bit more of a fresher market, and it's not a question of manipulation. It's just a question of that violence that hits the market, right, when you start to get moves is so aggressive that you could be down on your position huge. You know what I mean? The slippage is insane. And you've got to be very, very careful with cryptocurrency. Volume profile seems to be getting more and more popular. Analyzed it like crazy and just don't see a huge advantage to using it in trading. Something I'm missing. Well, the thing about volume profile, and let's use the let's use 30-minute of the SPYs. Right, so this is the S&P. This is the micro, right? The micro S&P. Just another point as well when it comes to using NinjaTrader. I don't know if you guys are familiar with this platform, but you know, if your computer's slow or you don't have a good graphics card or, you know, strong processing power, don't bother. It's just it will literally lag like crazy on you. You know, I've got top end. I've got a top end Ryzen. You know, I've obviously got 3090s and whatnot from the you know, from the mining. So for me, it's not a big deal. But the thing about volume profiles is this: when you're using it in the futures market, obviously because the volume is going through centralized exchange and everybody's seeing the same thing, right? So let's talk a little bit about volume profile and how it can be used in a way that could potentially be beneficial to your trading. So you look at this and you say, okay, at first glance, you're like, and we'll use today. Right? So this is today's price delivery so far, and this is obviously dynamic. It's going to be changing throughout the day. You know, this line right here is classed as the point of control, supposedly. So 41.62.75 is apparently where the most amount of volume occurred on the SPY or the ES today, as of right now. So how do we use that information? One of the ways in which at least I found, you know, that this can be used is if price is hovering around the point of control on the day and then it moves away from that point of control. There's two there's two ways in which apparently you can use this. Price goes back to the point of control because it needs to, for volume reasons, you know, fulfilling orders and these types of things, or price breaks away from point of control and starts to drive for something else, right? So let's say price gets back to point of control. Right now, price is currently at 41.53. Let's say you believe that price is going to start to grind back towards point of control. Yeah. Let's just say that we start to get a little bit of a push to the upside and price is getting to 60 and so on, and you think, I'm going to try and take that last portion into, you know, this line, this point of control. Personally, for myself, I don't understand it, you know, enough for me to have confidence doing that. It would just be pattern recognition, you know, or you're just assuming that it's going to go back to point of control. You really need to understand volume profiles and what, you know, what they can be used for. And volume profiles aren't new. They've been around for a very long time, and obviously some people use them you know, in an advantageous way, and they're very good at doing that. Me, I'm not really interested. But the way that I would look at this, just as a quick, I throw it on the chart and I'm like, okay, how can I use this information to make a better informed decision? Because ultimately that's the only thing I care about. I just want to make money, right? So I would be like, okay, I just see this as a line in the sand. You know, there's a lot of volume happening at 41.62. If it gets back above that in any convincing manner, great. You know, let's say it explodes to the upside, goes through point of control, and then it's hovering around about, you know, 41.70 or something like that. Great. You know, I'd be like, right, there's more chance now, having gone through this big area of volume, you know, where there's a lot of work being done, to potentially continue and go to the upside. That's how I would look at it. You know, because if you think about the volume that's happening in this area, you've got to try and put yourself in the heads or the minds of people that are trading. What are they all doing here? Like, why is everybody, like, why is there so much volume, right, at 41.62? You guys know, obviously, when I'm looking at charts, I'm not looking at candles. I'm looking at what they represent. I don't give a shit about anything else. I want to know what these candles represent. Can I use that information? Is it even viable, right? We've got to be realistic about these things. So, for me, I look at it and I'm like, why on earth is 41.62 so important? You know, according to this volume profile, 41.62 is where the peak amount of volume happened. Yeah. So how do I use that information? Like, what on earth are people doing at 41.62? Are they buying? Are they selling? Are they offloading? Were they in a position short and now they're buying back? Are they, in longs, and they've just been stopped out? Like, I go through all of these scenarios in my head, and I'm trying to understand why on earth this number even matters. It's not enough to just say, well, it's going to go back there. The question is why. If price statistically goes back there and you can verify that, say 70% of the time, then great, you're just trading on patterns. Yeah, it's a statistical edge, and that's all you're doing. But I like to understand what's happening. I want to know why 41.62 is important to whoever's buying it. Obviously, there's a lot of volume that's happened at that at that price level. So for me, I'm like, yeah, if that's important, it's a pretty significant price level, then getting through it means something. So if price does get through that convincingly, then I can maybe start to use that, to potentially open a trade above this level, or think about shorting below this level. Do you see what I mean? That's how I would use volume profile. I'm sure, and I make absolutely no claims whatsoever to understand volume profile on any level, but I like to just keep things pretty simple, try to understand them in a way that makes sense, really. So we are stabilizing in this area a little bit, right? We can see prices come down. It's 10 past 2 p.m. over here. Another 20 minutes, the market's going to open. I will stick around for another 20 minutes, and then after that, I'm going to have to shoot, a little bit after that, which is the reason why I'm doing the live stream a little bit before then. But you can see, look, price has come down into this level, right? And it's stabilized. So we're getting a little bit of a bounce here. So let's run through the scenario. Yeah. Why are people? Why have buyers stepped in here? It's not a great deal of buyers. Price has come down. It's hit this level, and now we're getting a little bit of a bounce. Buyers are stepping in. Why? Maybe for some of the reasons I was discussing earlier about this level. Down here, it's a little bit there really, but this level down here. When you got that last impulse to the upside to take out high of the day, a lot of people were going long here because they're expecting the high of the day. It's late in the session. There's about half an hour left till close. Generally, psychologically, people start to think, oh, we're getting very close to close. Generally, we tend to see that last sort of surge of volume in the last hour of the market session. Maybe it's, the likelihood of it going up there and taking out high of the day is quite high. They convince themselves of this and they buy. Price has come back down, it's hit this level, and it's starting to respond a little bit, right? So all we're looking for really is just confirmation that it wants to continue either going higher or wants to continue going lower. And until we see that confirmation, there's not really much else we can do. No, free. It's not the S&P. This is the NQ. This is the Nasdaq. This is the futures market, yeah? So we're looking at a futures contract. We're looking at the March contract of the Nasdaq, yeah? This is the S&P 500, right? This is the ES, right? So again, this is the March futures contract, okay, of the S&P 500, or it's classed as the ES, right? If you see an M in front of any of these, then that means it's the micros. I'm trading on a micros account at the moment. Well, it's not a micros account. I can trade the ES, but it's I'm trading the micros. I'm not trading the ES, the full E-mini. Like wheat and gold and oil, yes. So you have. I'll give you a quick example with gold. You've got spot gold, which is basically the price as of right now. So when you're looking at spot gold, you'll be able to see, the price as it is right now, and that is basically being traded as it is right now. The futures chart of gold will be slightly higher, right, depending on how close the contract is. So if you're looking at the March contract, let's say gold is at $1,800 on spot. On the futures market, say the March contract, it might be at $1,830. Yeah. On the further contract out, so you've got every quarter there's a contract, 4 contracts per year. So March, June. So let's say you're looking at the June contract of gold. Maybe the price is 1872, for example. So the further out you go, the higher the price will be. And all we're saying, futures, basically what they're saying is, let's say gold, you are buying a futures contract with the right to, at that price of purchase, take delivery of that commodity. So if you're looking at oil, for example, March, $78 per barrel, you buy it, and at the end of the expiration of that contract, you take delivery of the goods. Now, obviously, no one's going to take delivery of barrels and barrels of oil. The contracts basically expire, and they roll over into the next contract and so on. So if you want to know what the actual price is, of a commodity, you want to look at the spot price. All right. Ryan's saying, I started learning trading November of 2021. So needless to say, I've got my ass handed to me quite a bit. But not giving up. I hope learning in a nasty bear market pays off eventually. These training grounds or learning grounds or whatever you want to call it, in a bear market, is the best that you could possibly ask for. The problem will arise is if you don't take this opportunity, right, to learn effectively. If you're just randomly trading and just trying to get in and out of stuff without any, strategy or plan or whatever, then this is really dumb. You don't learn anything from that. I'm not saying this is what you're doing. I'm just talking generally. And you need to use the opportunity, right, to really understand. So let's take investing as an example. Let's say that you want to be an investor in the cryptocurrency market. This is the best time to be doing that, because it teaches you patience, it teaches you how to DCA, it teaches you some of the techniques and the way in which you engage with projects, it teaches you due diligence, it teaches you a whole host of things. Whereas in a bull market, emotionally, people don't care. Everything's going up, so everyone's just like buy, 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 buy. And then you get that kind of peak capitulation, right, where everything goes to crap, and people start to realize when that last that last portion of money goes into the market, that last sort of round of FOMO, and then bang, the market just tanks. That's a horrible learning ground, because you don't learn anything. It's so aggressive emotionally that you're in a position, it's doing really, really well, it's really going, you're getting excited, this is the one, I'm going to make millions, bang, it just, your soul gets taken from you, right? And I don't think these types of situations, I think everybody should go through that at least once so they can remember what that feels like. But if you don't learn from that, it's absolutely pointless. But in bear markets are brilliant. Best training ground you could ever ask for. So Free's saying, so you're trading on a system that kind of works like options that expire 4 times a year. Yeah, similar. But the way in which you trade them is different. Obviously, options are just a little bit more complex. That you've got puts and calls, and I'm not really an options person myself. But yeah, in terms of the time, and the kind of future prices and these types of things, it is a little bit similar. Yeah. Jimmy's saying Turvis, Ryan's saying boat. Yep. Just to show you, right, how experienced I am in trading. And how long I've been doing this, I can already guarantee, right, that Ryan and Jimmy have already thought about this, right? As you're going through your learning curve and you're learning, right? At some point you would have thought, when I finally get this, or maybe you've had some good weeks or whatever, that the market's basically just going to cease to exist. By the time you finally get it, the market's going to be gone, things are going to change, CBDCs will be in, there'll be no trading anymore, and your brain kind of just drives you nuts, and you're like, what's the point, right? So let me know if you've ever thought that. Be quite interesting to know. I've heard so many times over the years, guys, right, that trading is going to finish, there's never going to be trading, the forex market will cease to exist, blah blah blah, when we have one world reserve currency and or not reserve currency but one world currency and so on. There will always be a tradable market. When the market ceases to exist, the world will end. That's about as extreme as I can get. Jimmy, I made that newbie mistake. I felt like I had made it and took a vacation with my gains back in 2021. Came back to the downfall. Decided to stick with it and found people to learn from. Yeah. Never nice, man. Never nice going through these things, but if we learn from them. They're old cliches. We hear them all the time. Learn from your mistakes. Learn to make mistakes. Blah, 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 you know. You're scrolling through YouTube, you hear David Goggins, you know, screaming and shouting and stay hard, you know. Like, these things are amazing. They're really, really good. Until you don't apply them. So if I said to you, Jimmy, don't trade live for 3 months. Really knuckle down and just stay on the 4-hour chart. Just look for this particular pattern, you know, and don't do anything unless it happens, right? And then after 3 months, fund your account with $100, you know, open a trade using this lot size. And I just gave you an absolute top to bottom conditions and everything. What would you know, like, it would be very difficult for you to follow through on that because there's so much more that you need to learn along the way. Yeah, it's not enough to just do that. Everybody has their own personal learning curve and process. It takes time. It really, really does take time. But you have to have structured learning. If you don't have structured learning, then really all you're doing is just opening and closing trades, hoping that you make money. Hello, yeah, stay hard, yeah. I really like David Goggins, to be fair. I used to do stupid stuff like that. I used to get up at like 3 o'clock in the morning and just go running outside in the freezing cold. You're talking years ago, like 20 years ago, not now. You know, I get really frustrated with myself. If I ever get to a point where I start to get lazy or, you know, a little bit sort of down or things aren't really going my way, I'll just go to the gym and start going nuts. Yeah, David Goggins is yeah, just look him up. This guy's so funny, man. He's brilliant. I really like the guy. He's a savage, absolute machine. Gotta stay on point, man. Gotta stay focused. It's so easy. I know we're going a little bit off topic now, but it's so easy, guys, to get depressed or to get miserable. Like, just, there's so much going on around us, man. It's like very, very hard to stay positive, you know, in today's society. You can't even open your mouth without somebody like making a YouTube video about you and saying he said this and he said that and she said this and wait a minute, oh, we're not even allowed to say she. Wait, did you just say him and they? And shut up, man. Like, just be quiet. Do you know what I mean? It's like, it's enough to drive you bonkers. Yeah, Jimmy. You're talking about Goggins' book. What's it called? Can't Beat Me, I think it's called, isn't it? If memory serves. I've not listened to it. To be honest. But I know it's an amazing book. The audiobook actually has him in there as well. Somebody else is narrating, but then he comes in, you know, throughout the audiobook to say his piece as well. So yep, still waiting. We've got 8 minutes to the market open. If you haven't already liked the stream, make sure you like the stream. There's only 8 of you on here and I've got 6 likes, so I know most of you have liked the stream. Where do you ever grow in the next bull market? Outside Rashorn. So you basically, if you plant, I'm just kidding, man. I'm not even gonna carry that on. I think you mean where do I think Evergrow is going to be in the next bull market? I'm assuming. So let me just say a little bit about that for a second, right? Because you guys must know. I know most of you do because you're in my Discord, but obviously you know that I've got sort of Ramatic Finance, and for me it was just kind of a no-brainer. You know, you kind of look at cryptocurrency and you say, okay, why not use the technology but just pair it with stuff that's already there, you know, make it better. No worries, Donny, man. Take care. So use cryptocurrency, the technology, blockchain, all this good stuff, and just apply it to services that are already available. Just make them better, right? Because at least that way, what you're doing is you're opening up your project to a wider audience, both in and out of cryptocurrency, on and off chain. With Evergrow, what I've found, and I'm just being completely honest, there's too many switch ups, there's too many changes, there's too many things going on, there's too many focus changes, and the plan from day one has changed about maybe 10 times, right? And what happens is, and this is nothing to do with the leadership team or anything like that, I'm just talking about the way things are. If you keep switching things up like that and focusing your attention on one thing and then moving that onto something else, besides the fact that investors get tired, right, you don't move forward on the things that you're supposed to be moving forward on. Right now, I can't say what's going on at Evergrow. I have no idea. From my understanding, and I haven't looked into this as recently as I normally do, but I believe there is going to be a relaunch of Lunar Sky, and there's a wallet that's coming soon, right? So that's kind of where I'm at with Evergrow at the minute. And I will answer your question in terms of what do I think in the next bull market, but I need to talk about this first before we get to that point, right? So Lunar Sky launched, and it was kind of crap, let's just be honest, right? And then the issue for me personally was Lunar Sky launched, then afterwards they said it was beta. Well, you should have said it was beta before, right? Then they launched Lunar Sky and they said it's a version 1. Now we're going to do a version 2. I think I read a tweet yesterday, I believe it was, that said they're going to change the logo. So there's like something else coming now, and then there's going to be a kind of a relaunch, and it's like, well, and there's a reason I'm saying all of this. If you just bear with me for a second. So you look at all of this and you're like, okay, so what about what it's actually going to do? Yeah. For me, it's like when I launched the FSP, I'm like, right, I'm launching the FSP. We're going to have staking, lending and borrowings coming next. Then it's going to be the pension. Then it's going to be the mutual. I know exactly what's going on from start to finish. I know which direction we're going in. I know which of those services are going to be released first, second, third, and fourth, and then possibly fifth because there's something else coming, and so on and so on and so on. And I know exactly what that timeline looks like. And then I relay that to my investors and I say, guys, staking's ready, lending and borrowing's coming next. Give us 2 more weeks, guys. Lending and borrowing's ready. Pension's coming in a month. Give us a month, guys. Pension's ready. Da 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 da. So you're telling people what those things do. Staking. All of these things generate revenue because there are fees that are involved with engaging with the FSP for all the multiple services, and then that revenue goes back into the Rhomatic Finance ecosystem. Some is used for operational costs, some is used for buyback and burn, some is used for investors, some is used for bonuses, whatever, right? And that's all planned out. Investors know, they have the confidence that that's going to happen, and then when you execute on these things, people see that and they say, yep, top bins, these guys are doing what they said they were going to do. When you go back to Evergrow and you say, okay, we started here, then we went here, then there, over here, back there, somewhere there, over there. You don't know what's going on. So it's very difficult to answer that question. Where do I think Evergrow is going to be in the next bull market? You also have to remember as well that Evergrow already have 140,000 holders, of which there are going to be some dead wallets and whatever else, but let's just say 120,000. So 120,000 holders. And don't get me wrong, I wish him all the best. I've talked to Sam. I haven't spoken to him recently for quite a while, but I've always gotten on with Sam. I've never had an issue with their team or anything like that. They're really nice people. But you've got to be realistic, and I just look at the facts. They've got 120,000 holders. They're kind of mixing and matching and changing things up, and the focus is all over the place, and this and that and the other. And then when they finally release something, it's just all the hype and everything else the product doesn't really, address the hype. It's just not a great product, or it's not really what people expected or whatever, and then people just get fed up and they sell, or they're just like, oh, never mind, I'll wait for the next one. So it's very tentative, very, very tentative. If you've already got 120,000 investors, how many more are you going to get? Yeah, because you're not addressing the one thing that's really, really important. Yeah, how are you going to get off-chain investors right to use your services? The wallet, maybe, I get that, but unless the Lunar Sky platform addresses you know, a way for off-chain investors to be able to invest in or use Lunar Sky in a way that benefits them off-chain using blockchain technology, then it's just another OpenSea. Just, you know, a very muted down version of OpenSea. That's just my opinion. Can't hurt me, that's it. Yeah, sweet. Back in the days, we were fresh and hard. Sounds fabulous. I'll check him out. I agree with you wholeheartedly. Bloody hard to keep positive in today's world. It is, man. It is. You know, but you just keep grinding. Evergrow, Free saying Evergrow as to be the next OnlyFans. Lol. I very much doubt that. I know you're saying it in jest, but I very much doubt that. Right, market's opening in 1 minute, guys. Very much doubt that. You see, the other thing as well is that they started with, you know, they built the hype. There's nothing wrong with switching direction. There's absolutely nothing wrong with that, but you have to communicate that effectively. Yeah, you have to be really clear about your communication. You know, so it started with Crater. I was really looking forward to that because I use Patreon. It would have been perfect. Great opportunity for me, you know, to switch from Patreon, you know, and go to a service that is cryptocurrency, or at least uses cryptocurrency as well. Would have been really cool. So, you know, a lot of people invested and had hope, you know, that Crater was going to be a great product once it was delivered to really push Evergrow and really get it going. But that changed, and then it switched, and then it, you know, the focus was on NFT, and then that was launched, and that wasn't that great, and then they kind of, now it's beta, and then they change it. It's that's too much. It's like, whatever, man. You see what I mean? So I think people are just getting fed up. That's all. But who knows? Maybe this next round of announcements that are coming soon. So the market's open now. Next round of announcements, maybe, you know, maybe they're the ones. I don't know. We'll see. So, bit of a muted open so far. Nothing spectacular. If we don't see movement on the 15 or the 30-minute chart, then it's just a bit muted. There's nothing really happening, to be honest. All right. Remember, we're very close to the whole number, 12,700. It is likely we test that. But I certainly wouldn't want to be taking a trade into that level. 5-minute chart. You can see the build up here. Very tight. Really want to see a pop to the upside, to be honest. I don't really want to be taking a short on this today. What happens to Crater? Nothing. I think they've just shelved it for now. I don't know if it's being worked on, but I've not heard anything about Crater for a very long time. Just a quick side note when it comes to futures as well. So you see we're very close to the whole number, right? For me, the likelihood that that whole number gets traded to, you know, it's a possibility, right? But price, I've seen this happen many times. Price will go all the way up to, you know, 12,740, and then it drops all the way to, you know, 12,700, and then it rips again to 12,760. Like, I've seen this happen over and over again on the Nasdaq. So it's dangerous, man. This thing is dangerous. You've got to be really careful how you're trading this. And you can see, look, micro stability. Like, look what's happening, right? Let's mark this out. So far, we're seeing a little bit of resistance here. Yeah, very minor. And this is what I see when I'm trading. But I just want to show you guys how this is unfolding, right? So it seems like, you know, the 30 to around about 40 level seems to be causing a little bit of a problem, right? So we make a note of this. That's great. I'm watching. I know this is a little bit of a challenge for now. Price is now coming back towards 20 to 18 to 17, maybe 16. We're getting that rejection from there right now on the 5. You can see that clearly. And now we're starting to drive towards that, you know, 12,700 level. And then we'll see how it responds down there. Now, if we break 700, probably going to go to maybe 690 to 680. There is 2 minutes left of this 5-minute candle, so it can change dramatically. And there we go. Break of 700. Price starts to run a little bit. 96, 94, 95, 93, 90, 90, boom, there's your 90, right? Now, if you opened a trade expecting this to go down at 12,710 and it went all the way up to 12,733 and then did what it's doing now, you would have been stopped out. You wouldn't have been able to deal with, you know, the loss. It would have driven you crazy. Maybe you've just lost 100, 200 bucks or whatever because you're over leveraged, you're going crazy, you're trying to capture something that, you know, you're asking your account size on a small account to do something it's not allowed to do or can't do, you know, and then you miss the trade. You start to get really angry, you get frustrated because you like, I knew it was going to go there, and so on. That's what futures can do to you. So you've got to be so careful how you're trading the futures, yeah, especially on smaller accounts. So far seems to be holding this level. Let's go back to the 15 and we'll just do it this way. Okay, so 15-minute chart. So 84 seems to be the low. We're back above the 700 level now. So I would want to at least see price back above 30 to 40 before I would even consider taking anything on this. Or price all the way down here, you know, at this level down here, 12,550. For a short, it's got to get to at least here. I know there's a big distance from there, but I would want to at least see something significant, you know, for me to consider a trade into these lows down here. But in terms of a long, in terms of price moving to the upside, you know, and taking a trade into all of this mess up here, I want to see price back above 12,740. If I don't see any of those two conditions, then I won't be trading today. So we'll give it another 5 minutes and then I'll close the stream. And yeah, we'll take it from there. Kind of leverage. If I can avoid it, none. Halla. The lower the leverage, the better. If I can avoid using leverage, or at least only use a small amount of leverage, then I prefer to do that than use, you know, much larger leverage like 10 and 20 and 30 and 40 and 50. Some offshore companies or offshore brokers allow you to use, you know, 100, 200, 400 times leverage, 500 in some cases. But you know, when you're using leverage, it's very easy to blow your account. Because it's not the leverage, it's you, like the person. If you can't control your emotions and you take a position, let's say you've got a $500 account with 500 to 1 leverage, it's so easy to blow that account. Sure, you can double it, triple it easily if you catch the right, but what happens is you have to be absolutely right on every entry, you know, and there's so much pressure. It's, you know, it's just not worth it. Statistically, it's hard to do that. Even just normal probabilities, very difficult to do that. So the better way to go is to just, you know, use the lowest amount of leverage possible and just focus on, you know, trading clinically, effectively, and learning from every single engagement with the market. So yeah, a bit of a muted open, not a great deal happening. Another 7 minutes left of this 15-minute candle. Let's drop down to the 5 and see what's happening on the 5-minute. So you can see we're starting to get a little bit of a push to the upside, right? Maybe we get a trade here. I'll just hang around for a little bit longer. See what the 2 minute's saying. Yeah, a bit messy on the 2 minute, to be honest. I'll stick to the 5 minute for now. So you see how easy trading can be, right? When you just, you plan out what you want, and you just do nothing until it happens. That's it. I want to see price get back above 12,740 convincingly, really show some indication that it wants to go to the upside. I don't need to rush, I don't need to go nuts, I don't need to anticipate price going into that level. All I need to do is just wait for price to get through it, because remember, I'm not trying to take it. This is so important. I really wish the whole world was here to listen to what I'm about to say. I'm not trying to take a trade from 12,715 to 12,740. Yeah? That's price. What I'm trying to do is I'm trying to take a trade where I can get 5 to 10 points. That's it. Now, it doesn't matter where I do that in terms of price. What matters is the context correct for me to take that trade? And is the possibility that me getting that 5 to 10 points higher if I wait for it to break 12,740 convincingly with momentum? Yes, of course it is. So why not wait for that? Nice to know seems to always lose on high leverage, wins usually on 2 to 5. Yeah, because it forces you to think and gives you a little bit more freedom with your account. It puts constraints on you as well to stop you from doing something stupid. What are you vaping today? I don't know. I think it's Blackberry. Yes, no, Blackcurrant. Blackcurrant. Seven minutes left of this close. Sorry, 7 seconds, right? So the 5-minute candle is about to close, right? So let's see. Let's see what we get here, right? So there we go. Right, a little bit of a pop through. And get rid of this now. So how would I get into this, right? You could just grab it right now with the expectation it's going to continue. So we drop down to the 2 minute. Okay, let's see what the 2 minute's saying. Right. So 2 minute, okay, I'd want to see a drop at least to 30 again before I'd consider. I want to see how price reacts at this level. Okay. Got a minute 24 seconds left on this candle. Price coming back to 25. Okay. So we've already had a dip below the whole number. Okay. Again, just being patient. Yeah, not looking to be a hero here. Remember, this is a 2 minute chart, so this wick here I'm not really interested in. So let's take a small stab at this, right? I'm going to bring the stop up a little bit. Let's go back up to the 5 minute. All right. So might see a little bit more momentum. I think that stop's a little bit too tight. Let's bring it down a bit. Now you can see, and I don't mind taking a loss on this, if needed, because obviously it's a trade that I'm comfortable taking, but you can see how easy it is for your account to get absolutely decimated, right, when you're trading the NASDAQ or the NQ, the micro NQ, on the futures market. I opened this trade and we were down almost $20 right before we can even blink, yeah? So we should start to get a little bit of momentum to the upside. And we're going to feel this out, right? And I'm watching this price, yeah? I'm watching the P&L. I'm looking to see what's happening with the P&L. Am I losing more often than I'm in profit? So am I in a loss more often than I'm in a profit? So far, yes, right? So this seems to be an area where price is struggling. Is there a block there? Is there a huge order there, right, that needs to be, eaten into? If we start to gain some momentum, you can see that price is starting to accelerate just a little bit, right? So there's definitely orders here, 100%. Yeah, and you can see the acceleration. You see how price is just starting to accelerate a little bit as it's going through that level, right? Now, if it starts to recede and come back now, I'm closing the trade immediately. This should just go. If it doesn't go, I'm out. I'm out, right? I don't, for me, that should have been enough. Yeah, this is how fast I am as a trader. It may continue to go, that's fine, but that for me, as it's bouncing up against the 37, 38, the 40, back down and so on, it should just go, which means, you know, it's I don't feel comfortable or confident enough, right, to hold this trade and get that momentum that I need to at least push price 10 points, right? Possibly 15 points. You can see it's not really finding that push. You know, this should have gone. I've been in trades, you know, where I've basically taken a quick scalp and price has just exploded. You know what I mean? Because it's hit that level, it's hit that block, and bang, off it goes. Yeah, that's what we want to see. We want to see a push like that. I'm not seeing it, and it's taken a little bit too long, you know, for that push to happen. So I would much rather wait now for price to basically get through some of these upper levels, you know, and pull back a little bit. Show that it wants to stay here, show that, you know, get a little bit more context and proof, right, that this is strong, because as we're approaching that 50 level, we may bounce through and then maybe back down, and then we'll create a range between maybe 60 and 40, and then we'll get that secondary breakout to start challenging these upper levels. That's what I want to see now going forward. Now, obviously, to the downside, it doesn't look like we're gonna, you know, we're gonna be moving lower. So again, now we just chill. We go back, pretty decent 15-minute candle for now. Got about 30 seconds left of this 15-minute candle, and this may not be coming out in the live stream, but the way in which the Nasdaq is moving right now is quite sluggish. It seems, oh, it's a pretty strong candle, but it's not. We sat and watched this entire 15-minute candle unfold, right? And I know there's only 5 of you on the stream, right? Which is you know, which is fine, because I can still ask the question. But within that 15 minutes, if you were watching the chart, did we see enough to give us the confidence that that 15-minute candle, the way it looks right now, is as strong as it looks? So to ask the question again, that looks like a pretty decent strong 15-minute candle, right? Is it as strong as it looks? No, as Ryan said, no. That's correct answer. Jimmy's asking, too much wick at the bottom. No, it's not about the wick. It's just when you sit down and you look at a 15-minute candle, you like, you know, like that, you're like, wow, big strong wick to the downside, rejection, big strong push to the upside. Looks like a really strong candle, but we watched it. We watched it form. It was sluggish. It broke this level, then it went back up, and it was like really sort of blur while it was going up, and then we finally get above the 40 and we took a trade, and that wasn't really moving much either, you know, and then ultimately we're just kind of flat in this area now. So we know that that 15-minute candle is not as strong as it looks. That does, you know, it looks great, wow, big strong candle, but the representation of what most people would look at and say, right, this is a pretty strong candle, it went down, it broke the lows, and then it's rejected and continued to the upside. That's pretty strong. Maybe. But we watched it all unfold, and we can say with confidence, yeah, it wasn't really that strong. You know what I mean? So what I'm thinking here, and you'll notice I've drawn this line here, is I'm thinking if one of two scenarios, right? If price, I mean, it's not a bad spot to pick this up, to be honest, with a really tight stop. And to answer Hala's question, do you immediately make the stop loss in profit if it is, meaning move to break even? I'm very aggressive with the way that I move my stops. Very aggressive, you know. I'm not in the business of throwing my money away. I don't want to be in a trade, you know, and watching that basically go, you know, hit full stop. If I can avoid it, I'm always trying to avoid hitting a full stop, always. So what I'm thinking here is potentially taking another long with a stop just below these levels, you know, or because there's 2 minutes left of this 5-minute candle, right? Yeah, stop's too wide. Yeah, I'm going to leave it for now. Exactly, Jimmy. Exactly. Excuse me. End result does not match what we saw. That is exactly right, what you've just said. The end result we look at and we're like, wow, that looks really strong. But what we saw, we're like, maybe not so strong. Yeah, that's a really good way of putting it. I like that. So I want to see a little bit more of a pullback, at least to 31.32. If we can get back to 31.32, I'll grab this. You know, one of the other things that traders do is they can't stand missing out they can't stand missing what they think is going to happen. Yeah, you're looking at this and you think it's going to break out to the upside, yeah, and they don't want to miss that, so they just get in. But you're not really thinking about your stops. You're not really thinking about the context of what you're seeing, right? So I just want to see what it's doing here at 32, 31, 32, 44 seconds left of this 5-minute candle. Now, the second scenario I was going to go into is what I would like to see now, as we're watching price kind of stabilize down here, is I'd like to see the next 5-minute candle when this one closes. So ideally, price stays where it's at, next 5-minute candle starts, and then it reverses this 5-minute candle and breaks back above 47. That'd be brilliant, yeah. And we anticipate halfway up, you know, for a trade into, you know, these levels up here. So again, we're just going to watch. Now you see how easy it is with no experience, with, you know, like you're new to trading, you're kind of going through the motions. You see how easy it is to lose money when you're trading. It's so easy to lose money. Now look at this reversal. Wow, complete reversal now. So let's go to the 15-minute chart and take a look. You see, obviously, I'm being very, very patient. I'm not trying to, you know, be a clever clogs. I'm not trying to, you know, be smart in any way. All I'm doing is I'm viewing and watching price moving around and trying to get a feel for what's happening. This level can go now because it's irrelevant. So we do the same thing again. We stair step, right? If this 15-minute candle is reversed, the next level that we're interested in is this level. We want to see price get back above this now. It's not hard, right? I already know that I'm not interested in taking a short until price gets down here for these lows here to drive into these lows. So there's nothing for me to do until price at least gets down here. If I miss the entire move, so what? It's done for the day. But if this 15-minute candle is reversed and we finally get back above that 50 and start to punch towards 55, then I can do the same thing that I tried earlier with that trade. I can take a trade knowing the context is there. We've had a pretty decent first 15-minute candle. Now we've had a secondary 15-minute candle that has again been reversed, you know, and then we can start to take that last portion into these levels up here. It's about context. Everything is about context, you know. And what happens is people watch this up and down, up and down, up and down, and they're like, oh, I'm going to take a breakout. Oh, that didn't work. Oh, it looks like it's going down. I'm going to go short now. Oh, fuck's sake, now it's going back up. Bang. Yeah, you're down $200. You're annoyed and you're agitated. And that's what happens. People get frustrated, going back and forth when it's so unnecessary. So unnecessary. We've seen nothing today that has given us any indication other than that first initial pop that we were going to see continuation to the upside, you know, and so far we're not really seeing anything that we're going to see continuation to the downside. We're still stuck in this really horrible range. Now obviously at 2:15 we had an FOMC member chatting, so I don't know if he's still talking, but so far it seems whatever's been said, if that's what's affecting the market, hasn't been, you know, received well. So we're seeing a little bit of a push to the downside. So yeah, all good. Yeah, I may as well hang around for another 8 minutes until 3 o'clock. What would be amazing is if we see a really strong reversal here. So if this 15-minute candle just reverses completely, that'd be brilliant. I would have a lot of confidence at that point taking along, you know, back above 17 or 12,750. So we're just going to be patient. We're going to wait. Absolutely no rush. And in the meantime, if anybody wants to ask any last questions, you know, by all means throw them up. And also, I mean, do you guys find value in these? Like, does the stuff that I say make sense? Now another thing is, as price is starting to move on the 30-minute and it's getting a little bit extended on this 15-minute candle, I'm going to go to the 30-minute chart to get a bit more context of what we're seeing. So now look at the 30-minute candle. Nice one, Ian, thanks. Look at the 30-minute candle. Now let me ask you guys this: does that 30-minute candle look like a strong 30-minute candle? And can we confirm that that's a strong 30-minute candle? Nice one, Jimmy, thank you. It is a big drop, Jimmy. Yeah. But remember, we're not looking at the end result, right? We're not looking on the surface. We're trying to understand what's happened inside that 30-minute candle. You know, we've had two scenarios today. The 115-minute candle, which looked strong on the surface, but underneath, it wasn't very strong. Now we're looking at the 30-minute candle and we're saying the same thing. It looks strong, but can we confirm that it actually is strong? And in this instance, yes, we can, because we've watched price fail to break to the upside. We've seen a 15-minute candle much more aggressively move lower, showing that it wants to continue going lower by the looks of things, which confirms the 30-minute candle movement, which only has roughly around about 4 minutes left, is indeed very, very strong, because we see that false break on the upside. Now that doesn't negate the 750 level up here. Price gets back up there, great, but we're nowhere near that right now. So we can confirm that this 30-minute candle is indeed pretty strong. So if we were thinking about potentially going short, we may drop down to maybe the 5-minute chart and we look for a pullback, because remember, we've got 3 minutes or so left of that 30-minute candle. Let's say it finishes very strong. Then we drop down to the 5-minute and we're starting to try to find a trade within the strength of that 30-minute push, and then the next 30-minute candle starts. So what I would like to see, and I'm not going to do this because I don't care, I want down here, to be honest, but and maybe the trade sets up tomorrow for that. But what I would like to see is price rally a little bit and then show a little bit of rejection, or that price doesn't want to hit, stay at these levels, reverse, and start to find, its movement back to the downside and potentially take a trade around about 70 lower. Yeah, there's plenty of reasons why now we could continue going lower. We have the strength of the hourly, we've got the strength of the 30, we've got the strength of the 15, and it looks like the 15 minute starting to accelerate a little bit here as well. So as we start to accelerate, we can take this off the chart now. We've got about 2 minutes or so left of this 60-minute candle, 30-minute candle. Everything is finishing strong by the looks of things. So we go over to the 4-hour. Let's take a look at the 4-hour candle. Yeah. Now on the 4-hour, this could just very easily be a pullback in a impulse to the upside, and then we get that next move up that takes us to these highs up here. That's possible as well. But for now, we're just looking for, small intraday movements that we can confirm we're going to get 10-15 points on, and then just kind of sit back and wait for those opportunities to arise. So there's your 30-minute candle, just about to close, a couple of minutes. First time I've jumped on the live channel since getting through some of the Patreon videos. This content is great, thank you. Yeah, no worries, Reese, man, you're welcome. And I've always said, the information that I present, the education that I talk about, the things that I go through, You know, my kind of catchphrase or logo, whatever, LSPTV, you know, it's the trader, nothing else. I've always focused on the trader. Every person that I've worked on one-on-one with, I've always said the same thing right at the beginning. Yeah, by the time we're finished, you're going to have something that works for you, not for me. I will not be able to use what you use, because that's not the way this works. There isn't a one fits all. If you're using a automated system, that's different, because, you know, again, it is the trader. The trader's still responsible for making it work or not. But automated systems are different, because you're adding conditions and you're saying if A happens, then B has to happen, and then C has to happen. If all of those three conditions are met, then you can pull the trigger, right? The question is, will the trader pull the trigger? It's got nothing to do with the automated system. The system's doing its job. Are you doing yours? So it's very challenging. Yeah, trading can be very challenging because it's about you individually as a trader. And what I like to talk about is how we as individuals see price, see charts, see indicators, whatever it is that we use. I've trained and talked to traders, you know, that use MACD, Bollinger Bands, you know, charts that, you know, look nothing like this. They use order flow and all sorts of different stuff, and I've helped them arrive at something that makes sense for them, right? So it's not about technical analysis. Yeah, it's about being able to analyze what you're seeing and then use that in a disciplined way consistently over time. Ian's saying, if you are only looking for 10 pips, how tight would your stop be? Would you be going 1-to-1 or something like that? Yeah, I mean, if I was, I don't do this, but if I was looking for a 10 pip trade, yeah, on the Forex market, then I would be looking for a 1-to-1 at least. Yeah. What I like to do on the Forex market is I'm generally looking for a 30 pip range. As soon as I get 20 pips, I bring the stop to break even, and just leave it. And my stop will be, if I find a nice 30 or 40 pip range and I'm looking to get 30 pips or 20 pips, you know, my stop is generally 20 or 25 pips. You know, I always try to keep it at least 1-to-1 or less than 1-to-1. Now in the futures market, when I'm trading the NQ, I'm looking to, you know, let me take a look at the 5 minute. I'll give you an example. So if I was going to take a trade, you know, right now price is at 73. I'd want at least my stop to be above these candles just here, around about 700. Now that's 23 points. Way too much. Way too much. You know, for me personally, like a 10-point range, you know, on this is basically, let me tell you now, I think it's $25 if memory serves, just off the top of my head. I'll just tell you now. So a 10-point range is 40 ticks times by 0.5, so $20, right? So if I'm 10 points, like if I find a 20-point stop, yeah, that's $40. Now $40 is fine if you're trading maybe $1,000 account or $1,500 account, but if you're trading maybe a $500 account, maybe you don't want to go as aggressive as that. And this is where it comes a little bit tricky when you're trading futures, because if you're trading with a small account, you know, you're kind of forced to use really tight stops, and being forced to use really tight stops is a bit of a nightmare, because it forces you into a box where you're probably going to get stopped out most of the time. All right. So with all of that said, I'm going to close it there. We've had a pretty decent session. We've spoken about a lot of stuff, and yeah, we'll close it out. Hope everyone found some value in all of this, and I will catch up with you guys in all the usual places, and then on the next live stream, hopefully. All right, guys, take